Let's look at this potential trade on Oracle. Ticker's going to be ORCL. They're what I would call a cloud provider. They're very heavy in the cloud space. And what we're seeing is that they have some historical resistance levels that they're currently at. There's maybe two more levels above this potentially. However, there could be a very high probability that they start to move down off this level. They're very much extended over the 200-day moving average, and we might be hitting the culmination of what we call a golden cross pattern, which normally is going to be bullish. We might kind of be in an exhausting stage for that, and they may run out of new buyers at this higher price based on the current market, right? So here's some of the macro issues. I would go investigate, does Oracle do the majority of their business inside the United States, or do they do the majority of their business on the foreign level? And then how does that break down? Because if it's still 60-40, but 40% of revenues being driven from foreign sales, here's some of the macro things that could potentially impact Oracle. Normally, when the dollar becomes stronger, it impacts foreign sales because things that are priced in the American dollar become more expensive. And one thing about tech companies that do a lot of overseas business is they normally drive more revenue, and it's also going to be proportioned to how low the dollar is. When the dollar becomes a lot weaker, because it becomes less expensive for them to sell their particular products or sometimes often services overseas, right? That's something that we want to understand, because we know now that the Fed says that the rate or the cost of capital, the federal funds rate, is going to stay elevated at this current time for the remainder of the year. And so then as companies or tech companies have to do business overseas, their stuff is going to be priced in American dollars. Will it become will their products and services become less and less attractive to foreign buyers as time goes on, and they don't want to pay those prices because they understand that things have kind of got repriced because of the cost of capital, also the dollar being stronger. So that's one macro issue. So we know now if they reverse it, we could get a big boom back in the tech, and companies like Oracle could benefit from that. So those are some of the fundamental reasons. But looking at the chart, what do we see? We see this $90 resistance being relatively strong. We're looking from 2021 into current day of 2023. We're seeing that $90 resistance being really strong, or $97 resistance being another resistance level. And then we also having that 103, where right before everything kind of started to sell off in 2022, that's where it topped that out. So we see this big gap up, right? This must have been after an earnings or some extremely optimistic news. Massive gap up here on the daily, and then it's sold all the way down from there. So this is around 103. We have around, 97, and then we have a 90, right? The 52-week high on Oracle is 91.22 for the 52-week high. And we've been trading in that range since around January. Once we got this run up from October, hit those lows, everybody started buying into it. We got above the 50, above the 200, and then we've kind of consolidated and trade at this range, and we keep bumping off this resistance level. Now, what you normally see in the technical analysis is that when you see these resistance levels and you keep having the price bounce off of it, normally if the price can figure out a way to get above it after it rejects it multiple times, it normally will rocket up, right? Or if the price starts to fall down off of it, it normally will slam down. And what we did see is a gap down here, but then it started to walk its way back up to it. But historically, we're looking at a lot of technical analysis, and also it's going to be based on that ticker, based on the market for that particular stock and the news around that stock. Normally when a company keeps hitting that top resistance and it doesn't break through, but it keeps hitting it, normally when it decides to break through, normally it just rockets up. And one of the biggest reasons is because people have to get used to paying that new price. We see here, they only wanted to pay this price for a short amount of time based on the current market for that stock, and they did not want to pay this price at all. So we saw the gap up, and then people automatically said that this price here is going to be too expensive on the daily. So they rejected this price very hard, and they really rejected it all the way back down to 72.47, right? That's something we want to keep watching. So we have the golden cross here. We're well extended off the 200-day moving average. We're riding the 50. We're now back under the 50. Over the past few days, we got back at it. But what we want to continue to observe is, will the market still justify buying it at this price, or will people start to take profit from around here? Let me go to statistics real quick. Institutional buy-in is only at 43.57, right? That's really not that high. What I would look for is daily trading volume. Let's go to daily trading volume. We're getting around 7 million average volume, 5 million on Friday, which was under its average volume. And so in my opinion, based on this, I could potentially be looking at something that's really big for day traders, but not really big for institutions to stay in this deal. Okay, going back to the statistics again, it's not really being shorted. So what we're just going to get is a lot of people probably selling out of their position as opposed to it being shorted down, unless some news comes out in which people decide to short it down. Last earnings was not great, but it wasn't terrible, but it just wasn't great. However, I believe, in my opinion, that we can start looking at an extended price. And so what I would do in this scenario is I would just continue to observe it. I would put alerts on my phone to alert me when it goes above, let's say, $92, and to also alert me when it goes under 85, right? And I would make it to where it would give me that alert as many times a day as I needed to get that alert. I have alerts on my phone now. It'll alert me in the pre-market. And that's what I would do so I can know where to enter into my trade. So I would already, if I was going to play this, know what chains I'm looking at, know what delta's on there, know what the IV is, and then also set alerts in my phone to where if it goes above a certain price, I can be notified. And if it goes under a certain price, I can be notified. And I would get that alert multiple times a day. And then I would just be patient. And this is what I mean is to where I understand we want to get short-term money out of the market. I get it. But a lot of times, if you can be patient and you can just observe and you understand how to actually trade this market, there's a lot of bigger plays I can set up for you. Because if it moves up, what am I looking for? I'm looking for, if we get above 91, I'm looking for it to reject between 91 and 97. If for some reason we get above 97, I'm looking for it to reject, because what I think is that this, if it starts to become very bullish, it's because the rest of tech will carry this up. I don't think this is going to be a standalone like an Apple and maybe a Tesla. Right now we're looking at Nvidia, maybe a Microsoft. What I think is that if the rest of tech moves up, this will move up with it. I also think if the rest of tech starts to tank, it's going to also tank with it also. So what I also would do is make sure I keep my eye on the Qs, right? And then I would find out, is this hedged to the Qs? Is this indexed in the QQQ? Is it? And also, how does it move in relationship to the QQQ? So you can go look at I forgot the name of that particular word, and find out, does this also move with the Qs, right? Because it's a tech-based company. This may be hinged to the SPY, I'm not sure. So this is the kind of research I would want to understand, right? And then from there, I could determine what potential plays are here for this particular ticker. So the first thing I would do is look at the options chain. Are there any options that I think are decent on this chain that I can play both the upside and the downside? Because like I said, if the rest of tech moves up, this could potentially move back up to that 103, 105 region. And so if we get news to where, okay, we're going to reverse policy, tech's going to go crazy, in my opinion. These are the type of plays that I would continue to observe, continue to watch. While I may be getting shorter term money out of the play, this could be a good midterm or also long-term play that you can utilize. And I would paper trade it. So then when I have the money to play these type of plays, I already have a system designed around making money in these type of scenarios. Hope you got some value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.